I was in a Zoom call and they showed me some tools with AI and software. And I was like, oh, wow, I haven't seen something like this in 20 years. When I play tennis, you want to hit a good forehand, you have to practice maybe 1,000 times and then you're going to get it perfect. In finance, the more perfection you look, you're not going to succeed. And one thing that I capture when September 11 happened and the months after, what the US decided to do is that there was going to be a 5 or 10 bad years in the market. So I told my partner, you know what? The first thing we should tell clients to buy is
Alberto, welcome. Thank you so much for being here.
Thank you very much for inviting me. It's a pleasure to be here and having this conversation.
Awesome. So let's start with a little bit about you and your trajectory. What do how you came to be where you are now?
Yes, well, I came to the US to do my finance major. And after that, had the opportunity to go back to my home country, which is Venezuela. I started working for Citibank, first as an intern and then as a trader. And it was a great experience because one of the things that happened while I was working at Citibank is that the half of the banking went under. So the experience of working at the beginning of my career and having all this volatility and all these things going on. So you learn a lot in a very short term. So Citibank, saw the potential in me, and they sent me to New York, to Brazil, to Colombia, to Miami, and specifically a trip in Brazil was like a deciding point where I looked at the potential that was out there for being in finance, but worldwide, not just not in Venezuela. So after that, I had like 14 job offers when I came back to Venezuela, and but I always wanted to be more of the job offers were local banks, and I wanted to be more in the international part. And also, I want to mention, which is it's important on my values and what I bring to the table, is that my grandfather worked with a family that created the first ever bank in Venezuela, which is called Banco de Venezuela. And he became the owner's best friend. So he became basically the company. So it was the bank, and there was the family company. So he was the guy that managed the family company. So nowadays that I run a multifamily office, it's kind of like my grandfather ran a multifamily office for this family. He was also in the board of directors. Then when my father also went to study in the US, and when he went back, they told him, you have to come back to work with the family. And so he was a very high executive in the bank and in different banks that the bank owns. So when I went back to Venezuela, they said, you should go and work with the family. And I said, no, I want to be more international. So that gave me this background of hearing when I was younger, like what used to be a banker. Like it was more of kind of, and when we talk to clients, we talk about you're kind of like the head of like the doctor, the family doctor, right? So we're kind of like the finance doctor for a whole family, because we see, and this during the last 30 years that I've been in business, it's that you're seeing the family on a holistic way. You wanna help the family in everything, right? There's some important things that you don't know about, but then you leverage with accountants, with lawyers, with people specialized on the needs on the family. So from Citibank, I had an opportunity, and that's where I learned my entrepreneurship that I wanted. Is that one of the job offers that I got was that there was a firm local that represented Credit Suisse First Boston and everything that was done in investment banking. So, at that point in time in the 90s, First Boston was like the best firm in the world for finance. And I was like, wow, this is interesting that they're offering me to create a broker-dealer from scratch and work with them. And so I took that role. And once I was in the first day, I was like, oh my God, it's just me and a secretary. And I have to start from scratch, right? Which was great. And the first year, and they actually told me if you do good, you'll own 5% of the company in a period of time. So It was an amazing experience. I went from me and a secretary to 45 employees in 3 or 4 years. We were so I bought a seat in the stock exchange. We were so my specialty is in fixed income. So we were the third market maker in bonds, in local bonds in Venezuela. We had we bought a seat in the stock exchange. We were the number 6. So I have all these institutional clients that came through First Boston, so that gave me this thing. Okay, I'm in Venezuela, but I'm actually working worldwide. Then through Credit Suisse Asset Management, we got a client, a big client, a big family. That was like my first relationship with families, because at the end I was always in the institutional side. So my clients were banks, insurance company, hedge funds, all that.
And that's sort of easier sometimes, right?
Well, yeah, it's more, it's easier professional. And I guess that era that people call the .com. So I was always involved in technology. So I always wanted to know what's going on with technology and finance. And then I had a couple friends that they decided to do some startups. And I actually helped a couple of firms to raise money and also came up with ideas. And that's a point in time on my career. Had just got married, and I'm like, okay, I'm gonna go to the US. I'm gonna do my master's. I didn't want to do an MBA. I wanted to be something very specific. So I was thinking a master's in finance and a master's in technology. And I took the GMAT. I applied to these schools, the top schools at that time. And at that point in time, I said, okay, should I go and do this, or should I go independent? Right now, 100% independent, because this with other partners. And I guess that warmth that I have inside of creating things, I said, I'm just gonna go independent. So year 2000, I decided to start my, at that point we would call it a registered investment advisor, right? An advisory firm. The word multifamily or family office
did not exist.
But one thing that differentiated was that everybody was in the sell side. Everybody was working for banks and to see how much money you could make on the bank or yourself. And I was actually thinking of the families, because, in the late 90s, I started managing these families, and I started, hearing about their problems, their needs. And I said, I want to create a firm that just caters for clients. I mean, I know what's going on in finance. I know what people do, but I want to work with families. So when I started my firm, my first client was my family. My second client was, I brought a partner, which he was a silent partner, but we were very close friends. And he knew my father. I mean, he knew me when I was a baby, so he knew my father. And so I started, the advisory firm as a single family office, right? I was managing money for my families and related families, and then my partner's family and related families. So it was tough. I mean, the first, I always say, people in finance talk about the lost decade, right? That was right after .com crashed, and then September 11 came. So we had 2 or 3 bad years, 2000, 2001, 2002, recession 2002. And then came, the housing crisis in 06, 07, which the financial disaster. So my first 10 years, right? All that capital that I had created when I started in back home, and and I was an owner of a firm, I was depleting my assets, but I was being an entrepreneur. I was, like everybody's a startup. So first few years it was tough. Good thing about what happened in after September 11 was that I love to read. I read a lot. I don't know how many books I've read, but I read a lot. And one thing that I capture when September 11 happened and the months after, what the US decided to do was that I thought, based on what I have read in crisis, is that there was going to be a 5 or 10 bad years in the market. So what do people do in those bad years? And basically, you go to hard assets. You go to what today they call alternative investments. So I told my partner, you know what? The first thing we should tell clients to buy is physical gold. And we bought physical gold for clients. You know, they were sitting in, and we went one time to go and see the physical
The
gold in
actual,
Switzerland. Yeah.
yeah.
And it was a very James Bond experience, you know, because the guy that put us in where the goal was, like they had the fingerprint to get in. It was two persons, and the eye thing. This is like 2006, right? In
Oh,
Switzerland.
you were truly impressed by then.
Very
Yeah.
impressed, right? And how to get in the bank. There was a secret door. So it was very interesting. So for us, so we started getting invested in alternatives in 2002, 2003. So we started investing in real estate. You know, so my expertise is bonds, but I had to know. So other thing and that's one of the main pillars of how our firms have grown is that if you are not an expert, you have to find an expert. You have to partner with something, right? You have to collaborate. So in '03, I met a lot of developers here in South Florida, and we met a lot of funds in New York, and we said, okay, we should put money with these guys and let's learn the craft of real estate, which is something so different in finance. So, we say that the people in real estate, they talk bricks, right?
Right.
And we talk numbers, right? So that was the first relationship between alternatives and my firm. And '08 happens, and then opportunity happens. So what happened? I bumped, or he looked for me, which my partner David. He had an amazing story, and he decided to go independent in '08 after being a CEO of a fund of hedge funds, very successful. And we told our story to both, this is what I want to do in the next 20, 30 years. And I told him, well, there's a lot of things that I'm already doing. And we decided at first, it was we were going out, we didn't get engaged.
You were just dating.
We were dating, and the dating experience was that he knew and I knew that the best opportunity out there was to invest in real estate, because the real estate was distressed, and nobody knew what's going to happen in the world in the next 10 years. Are we going to people talked about 1929, 1930, the depression. Nobody knew, but we knew that if you bought an income-producing asset, and it was, in real estate is location, it was very well located, we would make money. So we decided, let's join forces, let's create a fund, let's invest in real estate. And that brought, after like 2 years being together, he decided, okay, I'm going to invest in Scala, right? Which at that time was called SmartInvest. And he said, well, what are we going to do for us to scale, right? What are we going to do how can we differentiate from everybody, right? Everybody comes to clients, and then you have the big banks behind you, right? The big banks, hey, I work in, Goldman Sachs and all these places. And we said, okay, you're an expert in hedge funds. I'm an expert in fixed income. I've had, 8 years in alternative investments. Let's dedicate the firm on alternative investments. Let's tell clients, and also because when you look at the markets today and many years ago, everything's starting to correlate. Something happened in Japan, it hurts, America. Something happens.
Yeah, the globalization.
The globalization happens.
But let me stop you there, because both of those situations in which you're talking is, first in 2008, you said this is an opportunity. Most people, most entrepreneurs are just scared, because that's what happens, right? In deeps, people get scared. Only the successful ones are the ones that go all in, because they have the stomach and like they're brave enough to bear it, right? And then you said, and then we went into a fund on alternatives. And back then, alternatives were not fancy at all. And people did not want to buy alternatives. Yeah. It was like this huge black box that you were like, wait, why would I buy alternatives? This is not they wanted the stocks, they wanted the market, they wanted visibility. So you're a contrarian in a way, in that sense.
Yeah.
How does your mind work? Why did you do that?
So in alternatives, which is, it's a great question, but why we were successful is that the alternatives that we picked were not black box, were something simple. We like simplicity in investment. So what we told families is, listen, we're going to buy real estate. You can go and see the building or the buildings, right? And this is going to be income producing, right? There's nothing sophisticated. We're not going to leverage it. We're going to just buy it, right? And then that led us into private credit, which is another market that we got involved by not by choice,
by need.
by need, right? And what was interesting, right? We were all bankers, so we Citibank, it was the best. That was my best MBA. It was
Right.
Citibank, right? So Citibank gives you this learning about, like, if you're going to invest in something, you have to have an asset. You have to have something that is going to back up, right, on the investment, right? So we had that ground. And when we started looking at private credit, this is the year 2010, 2011, we started saying, wow, this is interesting, because I'm a bond guy, and the bonds, you're always looking at, well, if things go bad, what I'm going to get back, right? And normally in bonds,
Like a good Latin American guy.
Right,
Right. Latin Americans love bonds.
yeah,
That's the
right.
only thing they want.
So you're like, yeah, I mean, unless the company goes bankrupt, but then you have to liquidate the assets, but you have all these assets you have, and they're
It's
secured,
safe.
and they're safe, and you can buy secured bonds, not just unsecured bonds. So when we looked at private credit, what we liked was that most of this, because at the beginning we met the big guys, right, the Apollos of the world, and these guys were doing senior secured lending, 3 to 7 years, with a lot of collateral and statistics. So I'm a statistics guy. I'm all math. So what was the history? And the history is kind of it was like 90% of a private credit that went bad, you recover your money. 90%. So you lose 10% in 20 years, and they were making 10, 12% a year. So you lose a little bit. So that's what we loved about it. So we started investing in these big guys, right? But then you have our clients. So this is 3 7-year loans. But then our clients say that long term is 1 year.
Right.
So we have to be creative. Okay, so wait, these guys are doing this. All right, we have some money there, a little bit of money. And then we started hearing conversations of people in California using technology to do underwriting on new loans. And we're like, what's this new underwriting? What's this technology that they're using, right? And basically what they were using is they're buying data. They're buying data to understand that the credit is just not the asset, but also the owner. Is he really paying his credit cards or the business?
So let me understand there, like your thought process to go into these sort of contrarian views throughout your entrepreneurial journey. What you look at the underlying thinking behind products, you look at the need of the client, you look at the markets. What are the factors that you look at in order to decide the type of approach?
Right. Okay. So, I mean, when you look at something is what you help your clients and what their needs, right? But we're talking about markets, right? And what we have seen in the past and the things that we have captured is that, so one of the best investors in the history, right? Warren Buffett. If you read about Warren Buffett, a lot of people talk about Warren Buffett's success and maybe that people don't read too much about him. They're going to say, oh yeah, because he found Coca-Cola when it was early and all that, and he buys companies that are like monopolies. But actually, if you read the books, the people have interviewed him, and you go more deep on what he does, he's the number one arbitrage guy in the world. He does arbitrage. He sees these windows of opportunities that appear. Sometimes the window is a week, sometimes the window is 5 years, right? And he goes down. So if you look at the last, I'm not going to say the last 5 years because he's older, but if you look in the 2010, and you read about it, a lot of the money that he made was doing arbitrage on trades. Like, let's say Kraft was gonna merge with Heinz, and if he knew that deal was for sure, this was gonna happen, the market, the deal was gonna be done in 6 months. So the market was, well, there's a 20% probability it's not gonna happen, and there was that arbitrage that he would take.
So when you say that, he's betting on that 20%.
He's betting on that, well, on 80%.
And that 80%.
On that 80%. So
and the markets generally are more scared then.
The markets think there's a risk it won't happen.
Right. But so they work on fear-based, and you work on ambition-based and on those numbers.
Yeah, but it's kind of like I mean, there is either
Is there a gut feeling that you have?
It's a gut feeling, or it's experience that you've seen this before. Oh, I've seen this before. This is going to happen, right?
Oh, this happened to me. Like the other day, like very simple. I have a lot of colleagues and friends in financial markets. And I remember sitting down in March 2020 in my car with my husband and talking to one of my colleagues. And he's like, buy now. Buy. Go buy. And it was March 2020.
Yeah.
Everything was shutting down.
Yeah.
I was like, what?
Yeah.
No, the world is coming to an end. I'm going to keep my cash.
Yeah.
All the years since, we've been like banging our heads against the wall. It's like, why didn't we listen?
Right.
And just now with the tariffs and all of that deep, my husband calls me and he's like, I'm not going to make the same mistake as 2020.
Right.
Let's go all in.
Yeah.
And we did it, right? So it is experience,
Yeah.
but it's also gut feeling.
It's also gut feeling. Also, and this, since I always tell people that when I get older, and I'm getting older, I would like to teach in a school, in a college, in a university. I always and Scala and Glide is always about it's a lot about education. We like to educate the client. We like to educate. And I would tell people, when one of the things that I learned from Citibank, and also my David, my business partner, is that if I get to read a lot, and it's kind of like you're searching for puzzles. And there was one thing that I always remember, this trade that I did, right? So I had to, when I was at Citibank, the bank decided that, Citibank New York did their trade, and then Latin America, we did whatever we did. So there was not synchronization. And supposedly at that time, Citibank was the global bank. It was the only one. So they decided, that management said, we're going to do a morning call every day. The most important guys in Venezuela, Brazil, it was like the important markets in Latin America. So it was Mexico.
And you're going to share strategies.
We're going to share strategies. So in New York, we're all synchronized. So my boss, my boss, the boss of the boss, was the person that had to be in that call. But that call was every morning at 7 a.m. And he wasn't a morning person. So they said, who's going to do this call? And the call had to be someone that was fluent in English and Spanish and knew a little bit of Portuguese, because there's everybody. So they said, hey, Alberto, he just came from the US. He's very intense in the markets. Let's put him in the call. But before that, they trained me and they said, listen, every morning you have to be here at 6:30 in the morning. And in Venezuela, at that time, there used to be like 8 newspapers. You have to read everything, and you have to be prepared, because you're going to be talking, you're 21 years old, you're going to be talking to all these guys, senior management. So I learned how to read fast and go through all these papers and be ready when the time I had to talk every day. So that experience, a year after, I'm reading the newspaper, and the government put a decree in one newspaper, which was not in the economic side. It was all on purpose. And I'm going through this, and I read it, and I'm like,
wait, what?
I have to read this again. And I read it, and I go to my boss and my big boss, and I said, we have to change the strategy. Look what the government said. And they're like at the beginning, no, we have this correct strategy. And we were, We were going this
All
way,
in.
all in. And I show this to them and they're like, oh my God, does everybody knows this? I'm like, listen, I went through all the newspapers. We had Reuters, we had Bloomberg. There's nothing there. And he goes, okay, you and your other business guy go and unwind the position and go the other way. And we did that in one day. And the other banks were like, yeah, I was like, here, do you want these bonds? And they're like, yeah, oh, here, do you want more? Yes, 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 yes. And we moved that trade in interest rate, we moved 20 points the market.
Oh, wow.
And it went in our way and went to the other banks, it went against them. We made a killing that year.
So it's all about paying attention and going with your gut.
Yeah, and the message to people is, if you're in finance, you have to be more informed than the rest, right?
Right.
You have to educate and inform and always be ready. And there's little news, very little ones, but those are the ones that make the.
I love that story because also it comes from learning in a way that it was like, how do you call it? Going through fire, that happened to me. I always say I studied journalism in English when I was in my 20s, and I came to the US supposedly on an internship to write in Spanish. And when I got here, I got an editor. Not only I was supposed to write in English, but my editor was from California. And he was actually half deaf. So it was really hard for me to communicate. But my editor was so detail-oriented and so focused on grammar that ingrained in me like this capacity to see things that others don't see. It sort of opened your eyes, and that's what happened to you. It opened your eyes to see things that others don't. Throughout your experience, what do you see now in the alternatives and in the wealth management industry that others you think don't see?
Yes. So, I thought about if you were going to ask me something about that. So, this is my third firm, right? So I own two of the firms. Well, I'm a founder and member of the two of the firms, and I'm always thinking of what's going to be next, right? And I think there's something that is going to change the markets, specifically because the new generation that are coming to the market, so the 25 to the 35-year-olds, they come from instant gratification, right? They come from with the cell phone, they want everything right now, and I think what's going to happen is that in the how you manage and this I'm talking about equities. So it's not about alternatives, it's about equities. But the concept was before it was mutual funds, right? Mutual funds, and then became the ETFs, and everybody's like, oh yeah, let's do ETFs and models of ETFs. That's what we use in the firm. But now there's something coming out which I think it's gonna revolutionize, and it's been there maybe, I don't know if it's 5 years, it's been 3-4 years. I went to a conference, I saw it, I'm like, no, this is not for us. Oh, this is only for domestic clients. That's what I thought at the beginning. And then, I saw a podcast and I heard a podcast and they talked about it. And I'm like, I don't think we're there. It's not, I'm not gonna dedicate time because this is not there. But recently, I was in a call, in a Zoom call, and they showed me some tools with AI and software. And I was like, oh, wow. I haven't seen something like this in 20 years. This is like, it's kind of like, it reminded me when, in the 90s, how do we trade? By phone.
Yeah, once you saw it online, it was
when
dramatic.
I saw the system, the charts and all that, I'm like, oh. So I went to New York, I took a course for 6 months on charts and all that, how to do online trading, right? So,
but what is it? What is it that you saw that? And what's the platform?
It's not a platform. It's something that is going to come in the market. But so there's something called direct indexing. Mm-hmm. Okay, but imagine putting technology and artificial intelligence on that. So that's what I'm seeing that is going to revolutionize. This is going to be my focus in the next few months because what I saw is
So
extremely powerful.
direct indexing.
Yeah, but through using technology and AI to do things that nowadays we use, but it's gonna be a big change. You will see it.
What's the
I
like?
think
Is
that
there a parallelism with algorithms at that time when we started trading with algorithms?
yeah, but it's more of this is what happens is that in our world, right? There's fee compression every day. So, people that are in finance, you're trying to find, well, I used to make, let's say bankers used to make 2% on management fees. Now the market is 1%. And if you have a big client, it's even lower, right? Then let's talk about commissions. Yeah. I remember when I was in the sell side, and then Schwab created the online broker, and it was $29.99 to do a trade. Then it went $19.99. Then went in $9.99. Then $4.99. Now it's zero because there's these big firms that are paying the flow, right? So I think that this is going to change, and I think that the big institutions, their fee compression is going to be immense. Like that's why Vanguard of the worlds, they're charging 5 and 8 basis points on their products because this is coming and this is going to reduce even lower. But
How is their business model going to evolve then? What are they going to do?
and that's where whoever is going to succeed is that if you know how to use technology, if you know how to manage money through tools, you're going to be able to charge a nice fee for a business, and you're going to have an advantage over other people because you're going to have alpha. You're going to show, look at my process, look at my model. I can backtrack it. Nowadays, you can backtrack everything with technology, and people are going to go, oh, wow. And there's going to be some efficiencies that you're going to show. That's something that's one of the things that I saw there in taxes. So it's going to be very interesting. It's not that robots are going to take over. I don't believe. Actually, I read this week that UBS closed down their robo-advisor, and there's a bunch of firms that have closed down the robo-advisors. So I think there's always the advisor, the personalization, because if you have small accounts, I would understand you can, automatization,
yeah.
but when you have complex families or complex wealth, not complex, but bigger wealth, you need to know a lot about, especially like for us, we manage money with offshore clients and domestic clients. So for us, it's a double, right? I need to know the rules of law in these countries that my clients, they live. I need to know taxes. I need to know the taxes in the US for them. There's inheritance tax, there's wealth tax, there's income tax.
So let's go there. Like, what are your biggest challenges with your clients, with your families, and for you as a business and for them as families right now?
I think families. Well, let's see. You said the biggest
Challenges.
The biggest challenges for families is to bring the second or third generation to the family business. Because I don't know who has these statistics, but there's a saying that, whatever generation created the wealth, the next or the third one.
The third one, they don't survive the second, the second transition. The first transition, you can survive it, but the percentage of family-owned businesses that survive a second transition is very, very small.
So we've had, it's been very nice that some of the families that we work with, when we decided to convert into a multifamily office, and this family said, oh, I used to have 3-4 banks, let me consolidate with you. And we had this experience of, oh, listen, we're 70, 75. We have this 7 kids, right? 2 families. 2 brothers, 7 kids. Can you teach them, right? Can you? They're graduating from high school or college. They don't know anything about it. So we we dedicated time on having monthly or quarterly calls and, hey, this is a bond, this is a stock, this is a debt, this is companies, this is onshore, this is offshore, and all that. So we always say clients, you need to bring the whole family
Into the table.
into the table, right? And in Latin America, it's more the patriarch, right? And you need to bring the wife, you need to bring, the siblings. So I think that's one. It's been the
And
challenge has been
financial education, like at all levels, is incredibly low.
yeah,
It's always been, because that's the way it works. But for me, it's always mind blowing when you have, sophisticated families with great amounts of wealth, but still they don't talk about money with their kids.
yeah.
And that is like a disservice both for the kids and for the parents to be, to trust what they're going to do.
Yeah.
So in your education efforts, I suppose you do that too.
Yes, we tell the moment we hit the first meeting, right? I just had a meeting with a family of a country that I don't have clients, and they said, "Hey, we want to talk to you." I'm like, "Oh, great! Yeah, I've never had a family from this country," and in the conversation we said, "Hey," because they were talking. There were three partners, and they were just talking about their business and their partnership, but they were never talking about their families. And I said, "Hey, I know you guys want to put this money for retirement, but what about, the wife?" And then things come up. "Oh yeah, my wife she's American."
Oh yeah,
And
that's a
so
huge.
now, oh, I'm Latin, but my wife is American, and then the kids are American. And how do you guys cope with that?
Yeah.
It was like, great that you tell us, because the more we know about the family, the more we can, do a holistic service as a financial advisor. And another thing that is important, and I hadn't thought about this word now as a financial advisor, but I've heard people, and I actually have two friends that are doing this, which is life coaching, right?
Exactly. That's a question I was going to ask you, because many years ago I had a firm with financial advisors, and the leader told me we're not going to be financial advisors anymore. We're going to be, financial or wealth coaches, because the reality is that the products are commoditized, right? So that support is what everybody's looking for now.
Yeah. The best conversations from the point of view of the client, because the client have given me feedback. The best conversations I've had with clients, which have created this trust with us, it's nothing about finance. Zero. We're talking about their point in time in life, what is the struggles, the needs, and we're talking about families, we're talking about psychology, we're talking about therapy, we're talking about the world, but we're not talking about finance. Nothing about finance.
Yeah, because at the end of the day, money is what gives you the freedom to make decisions at any point in time.
Yeah.
And it has nothing to do with money.
Yeah.
We were working with a financial advisory firm, and we are working on helping their advisors get trained. And one of the most important trainings is about money psychology and relationship to money, and so that they can talk about that with their clients. Have you been trained on that? Have you looked into it? How do you work with that?
Yeah. I was, I'll give you, I like to tell stories, which is better than just, but one thing of the success on the firms, because, you start solo, but then you start, having employees into that. And one thing that we look today is that first, you want to look for younger generations, because you want to understand the different demographics, right? And how it's different if I hire today a 45-year-old and a 25-year-old. So, and this is something like lessons from entrepreneurship is that surround yourself by young talent. That's super important. And then I think the one of the best things that we've developed and things that I take time is to listen to the clients and to listen to your employees. I just came back. I told you I was in Colombia, right? And I just came back and I have a person that works in Colombia with me and very young, very talented. And he sent me a text message, which I was like, it made my day. And he said, it was great being with you and meeting with clients, because when I'm with you and the clients, that's when I learn the most.
Oh,
Right?
wow.
It's not that I'm teaching him about, the trading strategies. That's when I learn the most. That's how I grow personally. So that was great. I mean, that made my week.
Awesome. So let's do to close a couple of like rapid fire questions.
Okay.
What is the best habit that keeps you grounded?
Can I say 2?
Yes.
Yes. Okay. Workout almost every day. So I work out every day. I used to be I wanted to be a professional tennis player, but so I play tennis a lot, but I work out every day. So, keeps your mind and body, set. The other thing that I do, it's also because I have 2 kids and I want those 2 kids to be, better than me. So every morning I prepare breakfast, and that's when I have that quality time with them, that conversation. I mean, try to also to have dinner with them every night, but dinner sometimes it doesn't
Harder.
happen. But at least every morning I'm there at 6:30, 7 in the morning. I prepare breakfast, and I'm having this conversation. Well, now I have one in college, but that was that keeps me grounded.
That's awesome. What is something that clients consistently underestimate?
Risk reward. They totally they, they're like, how can we get 10%? And you tell them, well,
With no risk.
but no risk. So that's one of the things that I tell clients. Are you willing to, if you want a 10% return, are you willing to live through a minus 20, right? If you can, yes, fine. If not, let's go more to bonds, let's go more to alternative, lower correlation and all that, right?
Awesome. And last one, what's something new that you are currently learning?
So how to implement artificial intelligence in process that we do nowadays in the firm and in research. So in Scala, it's research. In Glide, we have one young, talented kid that he's all day finding out tools that he can bring into the table and help the firm be, more all process and we cut time and
More
work
efficient.
and
yeah.
efficiency. So
yeah, we're doing the same.
so that's something that I would say the more we are into it, we're getting involved. I mean, we started investing in equities in artificial intelligence in 2017, 2018. But as a business, we didn't think about how can we implement AI
In your
7 or 8 years
organization,
ago, right?
right.
We were in investors and we actually made very nice money on the companies that were doing this. But I guess it's maybe 2 years ago when we decided, hey, we should check it out. And now we invested in a venture capital fund that is invested in AI. And when we had these meetings with the CEO of that firm, and he told us, he gave us stories about the companies, what they're doing, we're like, wow.
That's awesome.
It's amazing how things are evolving and so fast. So that definitely, you have to adapt, right? And that's something that, I want a message I want to say in people in finance is that if you cannot be a perfectionist in finance, like when I play tennis, you want to hit a good forehand, you have to practice maybe 1,000 times and then you're going to get it perfect. In finance, the more perfection you look, you're not going to succeed because you have to blend, you have to adapt, you have to be, I kind of sometimes think when they tell me about numbers, and I said, sometimes looking at the charts, it's kind of like an artist. When these famous artists, they were painting, there were some times, and I've been to a session where an artist is painting, and this one guy that I saw, he had like 10 paints in the wall, and he would go and he would walk to one and put something and then to the other one. And it's just creativity, right?
Mm.
And in finance, you want to be perfect.
You're gonna fail.
You're gonna fail because the market is the most imperfect thing, right? And the market is gonna know 1,000 times faster and more than yourself, right? So that's why I think that a message to young people that are getting in finance is don't try to find perfection, because in finance you just have to be flexible, adapt, and the world changes and you have to change. If you don't change,
that's awesome.
Yeah.
Thank you, Alberto. Thank you very much for joining us.
Thank you for having me. It's a pleasure and
great conversation.
Thank you.